And then when you get to zero interest rates, that doesn't work. So they have to print money and they buy money to get that pile going up. And that creates the cycle.
Your view is there are three big cycles in history. So the first cycle is when an economy comes together, gets wealthy, people are building up the economy, and eventually they build it up so much they borrow more money than maybe they should, and they dilute their currency. Is that fair?
There's a new order. There's usually some fight between the left and the right, or it could be foreign countries and whatever new order. And then when that begins, it's sort of a great equalizer. And capitalism is a fantastic enabler, because what it does is it gives people who may not have anything, who have good ideas, capital, so they get the resources to pursue that, and that's a fabulous thing. And then as it rises over a period of time, you'll see debt to income ratios rise and so on, because everybody gets more funded, because debt is buying power and everybody wants more buying power. And then also you see it naturally distributes wealth unequally, and it distributes opportunity unequally. So as that wealth gaps rise and widen, and then also because it's parents who have wealthy parents can educate their children in an unfair, let's say an unequal way relative to others. And so, but it gets overly indebted. And then because all this buying power, which comes in the form of debt, is somebody else's assets, then what happens is then you lower interest rates, you try to stimulate it. So for example, since 1980, every cyclical peak and every cyclical trough in interest rates was lower than the one before it, so that they can stimulate more debt. And then when you get to zero interest rates, that doesn't work. So they have to print money and they buy money to get that pile going up. And that creates the cycle, okay? So there's part of that cycle which is a capital markets, and by the way, this exists almost everywhere. And then with that, and then you see the monetization of debt and so on. And with that, there are also conflicts. Conflicts that are the wealth conflicts, and related to that, the political left and the political right. And then that creates the dynamic that we're talking about.
Okay. Now, you've cited in your book two examples where this has happened before. One is in the Netherlands, where the Dutch economy, ultimately, they had the only reserve currency, at least in Western Europe, the guilder, and they did some of what you now say we're doing. Is that right?
Yeah, the same patterns over and over again. They had, in the beginning, big education, they won a war, then they became very competitive. They went out in the world taking their goods, and they built ships that were the best ships around the world, so they can go anywhere in the world. They brought their arms with them, and they made a fortune. And with that, they brought their currency. And as they bring their currency, because it's a world currency, a reserve currency, others want to own it. And because others want to own it, because that's buying power, it's the common wampum, and then because of that, then they lend it to the Dutch. So in other words, Americans get lent money because others want to hold dollars, and then that allows us, that's the exorbitant privilege, to get more and more in debt. And then what happens is they lose their competitiveness. The British came along and copied from the Dutch and found, oh, they could make ships better and cheaper. And then they became the competitors. And then as the competitors are operating, they take market share away, quite similar to lots of technology companies and what's going on now. And then what happens is then they get more in debt, and then they have the other cycle that's operating, and then you have the challenges of that.
So they had the Dutch, they typified by the Dutch tulip bulb craze, where people were spending a lot of guilders buying tulip bulbs, right? So that imploded, and the British came in and they built a big economy, and then they kind of went south a bit. They had the
same exact pattern.
And then we came along, the United States became the biggest economy in the world around 1870, and since World War II, we've been the dominant economy. So now we have a lot of debt, you'd say?
Yeah.
29 trillion?
Good.
About that. So how are we going to pay off that debt, by the way?
Well,
inflation is the only way?
In the end, it's always print the money. Okay. You know, it's always print the money, because you see, one man's debts are another man's assets. And so if you're holding a bond and you receive you don't get compensated for inflation. Let's say people think cash is a low risk investment. Well, they're earning no interest. And when you have a 7% or a 5% inflation, you lose 5% of your buying power. Or if you're owning a bond, you have the same thing. And so what happens is not only is there the debt that is coming from the new debt created to run the deficits, but there become sellers of that debt because the owner, as an asset, it's not a good asset. And then there's so much selling. And what that means is that you either have to, interest rates have got to go up, and then that grinds things down to a close, or what they do is they have to print money. And so the history of all of these cycles is that the coffers are empty because you can't continue to spend more than you earn and give it to somebody, expect them to like it. And then you devalue it, and that becomes the cycle. And so you see the classic cycle of the ingredient is the cycle I'm talking about in terms of supply, demand, and the
All right,
debt.
so what you wanted to do is presumably let people know this is occurring, so maybe they could take action by letting their congressmen or governors know something about this or not?
Well, I think there are two things. What you can do to make a better society in your contribution, but also how you can individually take care of yourself in a situation that might be difficult.
Okay, so let's finish on the third part of the cycle. The third part of the cycle is somebody's rising up, and right now you would say China's rising up. Is that correct?
There's just numbers, and you look at it, and
okay. So if I want to do something about it, and I want to live in a time when China is not rising up so much, and we're better off in the U.S. economy, what should I do? Should I lobby my members of Congress not to print so much money? What should I do about it, if anything?
Well, again, it's
or the cycles are such you can't do much.
I think if we go back and we look at history, there are three main things that you can do. Okay, first, as a society, individually and then collectively, how do you earn more money than you spend, and how do you build a balance sheet that has more assets than liabilities? That's a healthy, and so keeping that in mind. The second is internal conflict or cooperation. Can you have internal cooperation because you realize what the consequences are? So I think that in the 2024 elections, there is a reasonable chance that neither party will accept losing the elections. And that is something that means that democracy, or a type of civil war of sorts, could develop in a way, this is realistic, I'm not being exaggerated by that. And when one looks at those types of things, there is a worry that one should have about the divisiveness and what it means for each other. And the same is true internationally. So basically, if anybody who has gone into wars, this through history, the people who are the most convinced that that's the thing to do all regretted going into wars because of what wars are like. So the things that I would hope to convey is, first of all, what are the arcs? Is that right or wrong in the arcs? Measured, not opinionated. Just look at those measurements so that you could see that. And then as we think about it, like I have a principle. If you worry, you don't have to worry. And if you don't worry, you need to worry. And what I mean by that is if you worry and you start to think what this direction could be and what it's like, then maybe you deal with the things that prevent those worries, where if you don't worry, maybe you get into trouble without worrying or with a confidence.